Hey everybody, good morning. Welcome to Stocks and Breakfast. My name is Pete Renzulli. Today is Friday, March 20th, 2020. So today's 3/20/20. Good morning, I guess. Strong close yesterday off the rally, off the lows, and today opening much higher. We're going to get into some news about why that's happening. Should you buy today's higher opening is the question of the day. So we actually on the daily charts, if you're watching the videos every day, or if you've ever been in my coaching program, you know that on the daily charts we have what's known as a swing low today. And I'll just briefly show you what that means on the chart, on the daily charts. But first, we're going to take a look at just a little bit of news, not too much because I don't want to turn this into another one of those regurgitated, here's what's in the news today. I only want to talk about what affects how we actually put on trade today, because all the other stuff doesn't matter as far as I'm concerned, as far as what we want to do here. So good news that we got a strong bullish opening today. The setup for today is to be very specific, where you're going to work from top down to figure out exactly which stocks should be on the top of your list. And then if those stocks play themselves out where they actually reach their profit potential and you start to move up a trailing stop and you want to look at a different trade, then you ultimately would start to work your way down, to stocks that might be above today's open, above the opening range, and even possibly above yesterday's close, which looks like that's going to be easy to find today too with today's open. But I want to stress this at the beginning of the video in case you don't make your way to the end. Buying today's higher opening is a lower probability follow through right out of the gate. You need a little bit of room where you could manage your risk potential. Your risk profile must be measured today, because we're going to start yesterday here and open all the way up here. That's a pretty wide risk potential. So you're going to need a intraday level or a level from yesterday, which might end up being yesterday's high, depending on how the charts look and what individual stock you're looking at. So I'm going to go right to the charts, so this way we can get right into it. I'm going to do a little bit of scanning today as well too. So you see, we're going to start out. This is actually what the reason they're giving, quote unquote, for why the markets are rallying overnight right now. The stimulus packages that were announced this week, which, by the way, my gosh, what an exhausting week of trading, right? They're saying this is why, so you can see that that's basically 6 o'clock in the morning, and here is, we don't really care about why, we only care about how we trade it. So you can see here what's going on in the overnight futures. We actually do have a little bit of whippy price action here, 2460 to 2500, so 40-point range, which is today that's normal, but that's not, that's still pretty volatile. From a day trading perspective. So you can see we're actually forming a little bit of topping action right there, but this is really the key that I wanted to talk about. We're closing in the afternoon in this area here and opening all the way up here. We have to decide, is yes, bullish is great, especially if you had the guts to hold an overnight position, but do you get out on today's opening? That's the question today, right? And hopefully we're going to answer that a little bit. So we're gonna start out with the SPY like I do every morning. I actually get people ask me why I'm looking at the SPY every day, and it really comes down to it's because it's 500 stocks. It's the S&P 500 trust. So I want to know what a little bit larger segment of the market is doing. Of course, you'll see in a second how I break it down even a little bit deeper. But we just want trades that affect a larger. I guess that if you think about it, trying to get a little tongue-tied. If we're going to use it as a market average, we want more than 30 stocks that are in the Dow. That's the best way to put it. So for me personally, that's why I look at it that way. If you're trading NASDAQ stocks, you might just want to look at the Qs. I actually, during the day, do look at all the major indices. I cycle through them. I'll look at the SPY, I'll look at the Dow, I'll look at the NASDAQ, I'll look at the Russell, I'll look at the semiconductors and oil stocks. And I'll go through that in a second. I actually have a list of ETFs I can show you that you can copy if you want. That's fine by me. So swing low is basically where you get a low, and then you get a higher low on each side. That's a short-term reversal pattern. This one happens to be an inside candle. So again, you want to read it a little bit deeper. A swing low that's an inside candle is not as strong as a swing low that took out the previous high. So that would actually, so this actually here, this is actually a good example, because this is actually a swing high. You have a high with two lower highs on each side, and this candlestick here actually took out that low. So that's why we have a little bit of optimism coming into the day. You can see that we actually had a bunch of charts that were positive. One thing to keep in mind here, let me just sort that again, is if the market actually does turn negative today, you want to have a list of stocks that were actually negative today because they had relative weakness while the market had quote unquote a little bit of strength, even though we didn't really close strong. We just actually had higher highs and higher lows. So, excuse me, we didn't have higher highs, higher lows to swing low. So, what I want to do is I want to just briefly walk you through again how to do some scans, and I'll start out with the most basic one so that there is a foundation of where it comes from. So. You can see that scan actually said 2016. That's my core scan. It's what I run all the time, and essentially what I'm looking for here. And again, if you're new to the video, finviz.com is a really awesome scanning software. I only use it before the market opens or after the market closes. I don't use it as a scanning tool intraday. And what I'm about to show you is the free service. I don't pay for it because I have charts and stuff on my other one, and I really don't want intraday alerts at this moment. So this is the core foundation, over $15, average true range over $1.50, and over 2 million shares per day traded and stocks only. So now we're going to work this down a little bit. I'm not sure that any stocks will actually meet this criteria, but we're going to look and see if anything happens to be over the 20 period moving average. If not, then we'll drill down to the 50. And actually we do. We have 32 stocks that meet the criteria. So let's actually sort those stocks by change, positive change, just to even work those down a little bit more. And now we're going to actually go and take a look at the chart. So this is the bare minimum criteria that I would be looking for. Now, this is actually a super interesting setup here because this clearly doesn't have clear order flow. Ooh, let me get these. You can tell I have the free version, right? I don't need it. This one doesn't either, but it meets the criteria. And that's actually a problem that a lot of traders have where stocks might meet the criteria, but there aren't good trades. Just because, and that's part of one thing that drives me nuts is a new trade will come in and a moving average will be flat as a board. Let's say the 20, again, just keeping it simple. But the last close was above the 20. And they're like, look, it's bullish. I'm going to go and trade it. And it's like, no, it's not. No, it's not. So it's our job to take a look and see if there's actually anything that has room to go. It's pretty interesting that some of these stocks have actually been bullish, strongly bullish, with the market kind of doing nothing. So what I'd be looking for here is not only stocks that are above their 20, which was the criteria, right, above the 20 period moving average. And it doesn't matter which ones, if we're talking about exponential or simple for this particular example. Yes, you can definitely do that. I like to keep that simple as well because it's an average, right? I want to see if anything was strong prior to the crash, prior to us coming in. So those are kind of the stocks. Like you can see some of these are actually still in pretty solid momentum, but any of them, let's say DocuSign, GSX, Xilinx, definitely not. Costco actually was making 52-week highs, and we know that they've been busy, although they were weak yesterday because they actually closed down too. So I'm looking for stocks that were strong prior to, and it looks like a couple of them, but again, nothing is really super jumping off the charts right now. DocuSign would be one of them. GSX would be one of them. Amazon absolutely was one of them. And so is Costco. So if we want to drill that down even further, we're going to go into groups and see what was strong for yesterday: basic materials, services, technology. Again, we're not going to find a lot on scans, but I think what I'm trying to do right now is give you an idea of what to do when the market's kind of normalized. So I'm not really finding anything that's jumping out on the screen right now. So that means I'm just going to go straight into game planning off of my normal list. So my normal list, I'm just going to go down the list, and hopefully you watched yesterday's video and grab some of that Tesla. We actually mapped out a scenario, how to day trade Tesla. And again, if we just jump down to the intraday time frame, we actually said opening price, trade around that level, and it was above the opening price all day. And multiple signals on the 5-minute chart. We actually had some really good emails come in yesterday. So again, swing low here. This is actually, it punched through, and ironically, you would have missed this entire move because you really didn't get a good signal. But we had an inside candlestick here that did not break higher, so we did not actually. Whoa, what happened there? That's funny. Something going on there with Microsoft. So this is something I want to talk about here. We actually had an inside candlestick here that did not trade higher, so that would not have been triggered, so it wasn't an entry. We do get a bullish U-turn here that does become an entry. We actually end up getting another one here that does become another entry. We get a swing low here, and we get an inside candlestick breakout here. So I hope that yesterday's setup gave you ideas to look at your stocks. Again, I'm not really looking to simply look at yesterday and say, oh, you could have. No, we talked about this, and the reason why is that we want you to be prepared with scenarios today. And there's nothing worse than looking at the stocks at 7 o'clock at night, 8 o'clock at night, like I used to do way back when I started. They'd be like, I don't understand. These patterns are so clear. Why can't I find them when the market's open? That's what I kind of want to hopefully train your eyes to habitually have the setup, look for the entry. Have the setup, look for the entry. But the key is here, you don't look for the entry if you don't have a bullish or bearish setup. So I'm going to go back out to the daily charts, and we're just going to start at the top. So again, a little bit stronger. I'm going to zoom this out a little bit here. A little bit stronger, well-bid candlestick here. Obviously, we have a low with higher lows on each side, right? And we took out the previous day's high. So we'd be looking for a move to the upside in Tesla. And again, it depends on how much higher it opens. And I want to actually get to that. You know what? I'm actually going to go back to that in a second. I'm actually going to come back to the screen. One of the biggest problems, or one of the biggest questions we're going to have today is people are going to say, well, how do I know where to book profits if we are opening up a massive amount higher? And I think that's one of the things. I'm going to talk about that right now. I'm going to come right back to the screen. Let's actually discuss that. So we're most likely going to get a higher opening in a lot of stocks today, right? Now, it doesn't necessarily mean we're going to get a gap. A gap means it's opening outside of yesterday's trading range. But what you want to pay attention to is the average true range of your stock today. So this is actually a good example. It's almost a whole number. So in the SPY, the average true range is 15. So exactly what does that mean? So let's just say, for argument's sake, that the SPY opens up at 245.40. Just for argument's sake, let's say 245, just to keep it simple, right? That means that the profit potential from the low to the high on an average day in today's market in the SPY is $15. So depending on where you open up and push from that level, $15 is what you can expect to get out of it. So that would mean 260 would be your profit target. That would be where you'd be looking to tighten up a trailing stop. But here's actually a big key. If we open up $5 higher, you now have to make a decision. Do I use $15 from the previous close, or do I use $15 from today's high? If it opens flat, which it doesn't look like it's going to happen today, meaning almost at the same price, that's easier. You have the move right off the low, or right off the low to the downside. If we open higher and push, now you have an extra distance between where it closed yesterday and where it opened. So the question comes in, do you use, in this case, the extra $5 that it spent from yesterday's close to today's open, or do you use today's low up to wherever it's going to travel to? It depends. And I know that's a super crappy answer, but it depends. I'm going to tell you what I normally do. I will normally readjust from where the stock actually opened that day. So in other words, if we open $5 higher, I'm not going to use the $5 gap, the $5 distance between yesterday's close and today's. I'm just going to use that price action from that candle. Because remember, the ATR, the average true range, doesn't calculate whether the stock opens higher or lower. It calculates whether or not the stock traded here from the low and here from the high. And most signals default to, you know what, I'm talking into the screen here. It doesn't calculate where it opens higher or lower. It calculates from the low to the high and the high to the low. Most software has used 14 days as a default. So that's why I personally say, even if we open higher or open lower, I'm going to use today's price action. So wherever in that first half an hour of the day, 15 minutes of the day, you find the low for the day, and if it happens to be a bullish day, you're going to go from today's low, in the SPY's case, $15. So I'm just going to go back to the screen, and we're going to take a look at, or I'm having computer issues today, in case you haven't figured it out yet. We're going to punch in, let's use Tesla as an example, because that's the one we just happen to be looking at. And by the way, if you have any stocks that you'd like for me to do an analysis on as far as a trading one, absolutely put it in the comments, and I'll be more than happy to get to it the next day. Oh, hopes if I type it in right. I just want to give you an idea of the differences that some stocks have in ATR, so that you can really get a grasp on it. It's actually much simpler to book profits when you know exactly what the stock normally does. So ATR at Tesla right now is $70.73. That is a monster number, right? So let's just take a look at Apple. Let's go through some of the more common day trading stocks. Apple's average true range is $17.11. You can see that how incredibly wide the average true range and how different they are in different stocks. So it's already gone $8. So we're not going to calculate that $8 because the average true range is only $17 from the previous low to the previous high over the last 14 days. So what I'm basically saying is, and I'm going to go to the intraday charts just to give you a much better example. So this here was the opening candle in Apple. So right here, 242 area ballpark is what the stock opened at as far as the low of the day. It opened here, pushed down here, that was the low. So we had a roughly $17 window in a normal market condition based on the last 14 days. So that's the new norm right now. And $17 would have been the high. And you can see it actually didn't even push up to that level yesterday. So you get an idea of what it means to have conviction in how to know when to book a profit, right? If a stock normally does $10, and just keeping it simple, if a stock normally does $10 and that's what it is under that normal circumstance, bounces and you get a signal in the afternoon, and this is important. If you get a signal in the afternoon that's a bullish buy signal and it's already gone 9, you have to say to yourself, well, nothing else is going on, and this is a normal day for what the stock is doing. Does it really make sense for me to get long a stock that has an average true range of $10 and it's already gone 9 for the day? How much more can I reasonably expect to get out of the stock? Now, you never want to cut profits short, but we are trading for what normally happens. Remember, our job is to know what is probably going to happen next, but definitely know what we're going to do. So if a stock normally trades $10 and it's only got $1 profit potential left, you better get a super tight risk spot that is less than 30 cents on that stock. So, normal 3 to 1, 2 to 1 at the most for a day trader. You don't want to go below that. So that's kind of what we're looking at today. So you really have to make a decision. Is buying a higher opening today a great idea? I'm going to be waiting for a pullback. So I want to make that clear. We're opening higher based on where we are in the futures right now. And some stocks are actually trading higher pre-market. I'm actually doing a video a little bit later today. It's about 7:15. I'm personally going to wait for a push off the open, a pullback, and then look for that first intraday pullback, red candle, either inside candle to buy or swing low on either the 5-minute or the 15-minute chart. If we don't get that, because if the 15-minute candle, then we go higher time frame, lower time frame, higher time frame. If the 15-minute candle and the hourly candle are the hourly candle's red and the 15-minute candle's well offered, I'm not going to look for an entry signal, despite what it might look like on those time frames, because I want the higher time frames to be in sync with my shorter time frame entry signals. So I know it was a mouthful today, but we kind of had a little bit of a different opening today, where there was actually a little bit more to talk about today. But I think what's super important is understanding that a higher opening, while good if you're overnight, you might want to tighten up a trailing stop in the market that we're in right now. It seems like the market's acting favorably to all the economic news from stimulus stuff. But if you're in the States here and you watched a lot of the news yesterday, it was all about medical supplies being hard to find, and the spread is supposed to accelerate. So thankfully, a lot of us are kind of quarantining ourselves, and as traders, we can be grateful that we work from home and we're not on the subway, or it's not really affecting how we make a living yet. So be safe, everybody. Personally, be disciplined in the market today. have a game plan for which stocks you're going to trade first. And again, have your list of these are my best scenarios based on we had a swing low on the daily chart. We took out the previous day's high as well, and we closed in the upper part of the range and above the open. So that's 4 pieces of the argument. And then look for where those stocks are going to trade. Are they trading and opening at yesterday's high, which would be resistance? So obviously not a good spot to buy as well. I'm personally going to wait for the higher opening, pull back a little bit, maybe even go sideways. If we don't pull back and we just go sideways, that'll be another entry signal as well, because that'll be good. That means the sellers couldn't push it back down, which actually is a big signal as well. If you're rallying and pulling back, that's kind of normal. But if you're rallying and going sideways, that's actually more bullish in this case because selling has dried up or the buying is still strong enough to not let it pull back. So those are the scenarios that we'll look at today. Be safe, be disciplined, but be aggressive. If you get your signals, don't hesitate. I got a really good email from somebody yesterday saying that they lost money on a good trade. That's exactly what I want to hear from people. Not that you lost money, but that you have confidence that you made a good trade. And the fact that the trade lost money doesn't make it a bad trade. It just makes it a trade that didn't follow through. So it is March 20th, 2023, 2020. It is Friday. Have a great day. If you found the video helpful, please click down and subscribe. It would mean the world to me. Have a great day and have a great weekend, everybody.